Understanding the core principles of financial audits in modern accounting practices. The landscape of financial auditing has evolved dramatically over recent decades, driven by technological advancements, regulatory changes, and an increasing demand for transparency across industries. For accounting and finance professionals, mastering these principles is not just beneficial, it's essential for maintaining trust among stakeholders and ensuring compliance with global standards. In today's interconnected business environment, the role of a financial auditor extends beyond mere number crunching. They are pivotal in safeguarding organizational integrity through rigorous examination of financial records. This guide delves deep into the intricacies of conducting effective financial audits while highlighting best practices tailored specifically for seasoned accountants and financial analysts. The evolution of financial auditing standards. Auditing methodologies have undergone significant transformations since their inception during the late 19th century. Initially focused primarily on detecting fraud, modern-day auditors now adhere to stringent international standards that emphasize accuracy, reliability, and ethical conduct within every audit process. The transition from manual record-keeping to digital systems has necessitated new approaches towards verification techniques. Today's certified public accountants must be well-versed in utilizing sophisticated software tools designed for data analysis and risk assessment purposes. International Financial Reporting Standards, IFRS, these globally recognized guidelines ensure consistency across different jurisdictions, making cross-border transactions easier to manage and interpret accurately. Governance structures. Strong internal controls and governance frameworks play crucial roles in minimizing errors before external audits even commence. With each update cycle introduced by bodies such as the International Auditing and Assurance Standards Board, IASB, practitioners need continuous education to stay abreast of evolving expectations regarding independence requirements and reporting obligations. Critical components that define effective financial audits. An efficient financial audit comprises several interdependent components working together seamlessly toward achieving its primary objective, providing reasonable assurance regarding the fairness of presented financial statements. These elements include, but are not limited to, risk assessments performed at various stages throughout the engagement period, along with thorough documentation processes maintained meticulously by both client entities and audit teams alike. Risk assessment models used during audits. One fundamental aspect involved in any successful audit involves identifying potential areas where misstatements could occur due either intentionally or unintentionally. Utilizing established risk models helps auditors prioritize which parts require closer scrutiny without wasting resources unnecessarily. Commonly used methods include analytical procedures comparing current figures against historical trends plus industry benchmarks, thereby enabling early detection anomalies worth investigating further. Additionally, walkthroughs conducted alongside key personnel allow understanding how information flows within organizations, helping identify weaknesses potentially exploited by dishonest individuals aiming to manipulate results misleadingly. Technological innovations transforming contemporary auditing processes. Digital transformation has significantly impacted traditional auditing functions, offering innovative solutions aimed at enhancing efficiency and reducing human error rates, substantially compared to previous years. Cloud-based platforms enable real-time access, allowing remote collaboration between dispersed team members, thus improving project timelines considerably, especially when dealing with multinational corporations having operations spread globally. Data analytics tools provide deeper insights, facilitating quicker identification patterns indicative of irregularities requiring attention promptly rather than waiting until end-stage reviews might miss critical issues altogether. Artificial intelligence integration. AI algorithms can detect unusual transaction behaviors, automatically flagging them for review, saving considerable time otherwise spent manually sifting through vast volumes data points. Blockchain technology applications. Its immutable ledger characteristic offers enhanced security features useful particularly when verifying complex supply chain activities involving numerous parties exchanging goods/services frequently. As adoption rates increase among top-tier firms, investing heavily into automation capabilities becomes imperative for remaining competitive within rapidly changing markets characterized high turnover rates amongst clients seeking agile service providers capable delivering value quickly effectively. Ethical considerations influencing professional judgment throughout audit engagements. Maintaining unwavering commitment towards ethics remains non-negotiable condition prerequisite for anyone entering profession regardless level experience attained so far. Conflicts of interest scenarios arise regularly, demanding careful navigation, particularly when serving clients whose interests may clash inherently with those expected from impartial observers tasked to scrutinize performances objectively fairly. Continuous professional development programs focusing moral dilemmas encountered daily serve vital purpose, reinforcing core values guiding decisions made under pressure situations, often lacking clear-cut answers available readily. Navigating conflicts of interest in practice settings. Identifying potential conflicts requires proactive measures implemented consistently throughout entire lifecycle engagements, starting initial client selection phase, extending final report submission stage. Inclusive policies mandating recusal whenever personal relationships exist between firm members designated handle particular matters help mitigate risks associated compromised objectivity, possibly leading legal repercussions later down road, unless properly addressed upfront. Transparent manner. Firms also benefit greatly from establishing robust whistleblower mechanisms, encouraging employees speak out against unethical behavior observed internally without fear reprisals, thereby fostering culture accountability. Transparency highly valued nowadays across sectors. Emerging trends shaping future directions within field of financial auditing. Ongoing developments continue influencing direction field, pushing boundaries. Conventional wisdom once considered gospel truth within circles. Specialists. Environmental sustainability concerns increasingly factor considerations affecting corporate disclosures, prompting regulators revisit existing disclosure mandates incorporating ESG factors explicitly, henceforth altering nature. What constitutes relevant material information worthy inclusion. Reports issued annually publicly traded companies. This shift demands heightened awareness among auditors needing understand implications. Climate change related risks, exposures impacting long-term viability. Businesses operating diverse environments worldwide simultaneously. Sustainability reporting frameworks. Adoption of standards like GRI, Global Reporting Initiative, will likely become standard practice soon given growing investor interest evaluating environmental impacts alongside financial metrics traditionally emphasized exclusively previously. Digitization challenges. While promising efficiencies, digitization poses cybersecurity threats requiring vigilance. Constant updates, protective protocols deployed around sensitive datasets processed routinely. Day-to-day operations carried out virtually nowadays. Moreover, increased globalization compels need harmonized regulations addressing disparities currently prevailing. Regional laws governing accounting practices internationally complicating comparisons. Analyses done. Cross-country studies undertaken. Researchers, policymakers alike trying to determine health economies worldwide. Best practices recommended when conducting internal versus external audits. Internal audits differ fundamentally from externally mandated ones concerning scope, objectives, executed methodologies employed during investigations carried out, respective contexts. While internal audits aim strengthening internal controls, improving operational effectiveness, externally led efforts primarily concentrated validating correctness. Representations made public-facing documents submitted regulatory authorities overseeing compliance statutory requirements applicable jurisdiction concerned party resides operates within. Implementing regular self-assessments enables organizations preemptively address vulnerabilities proactively rather than reacting post factum after incidents already occurred, damaging reputations. Bottom lines adversely affected permanently. Strategies enhancing effectiveness of internal controls frameworks. Establishing layered defense mechanisms composed multiple independent checks balances ensures minimal chances circumvention. Safeguards put place initially intended protect assets, prevent unauthorized actions taking place unnoticed undetected for extended durations. Periodic training sessions refresh knowledge staff regarding latest policies procedures pertinent departments. They work closely every day reinforcing importance adherence rules established higher-ups management hierarchy above them. Furthermore, leveraging automated alerts triggered upon deviation normal activity thresholds allows immediate intervention, mitigating damages, escalating situations becoming full-blown crises warranting emergency responses, costly remedial actions required afterwards. Challenges faced by practitioners navigating complex regulatory environments. Keeping pace ever-changing regulatory landscapes presents formidable challenge requiring adaptability, flexibility mindset, constantly updated skill sets acquired through ongoing learning initiatives offered periodically throughout careers spanning many years, dedicated pursuit, excellence, discipline. Lack clarity surrounding interpretations. Certain provisions statutes creates ambiguity, confusion, especially when overlapping jurisdictions apply simultaneously, creating conflicting obligations. Hard reconcile, satisfying simultaneously without violating something somewhere, causing penalties, fines incurred inadvertently. To overcome hurdles posed, complexity legislations. Developing close partnerships, law firms specializing niche areas helpful, immensely providing guidance, navigating murky waters, fraught, uncertainty, potentially detrimental outcomes, ignored, improperly handled, incorrectly. Conclusion: financial auditing stands at intersection, innovation, tradition, requiring balance, respect past achievements, embrace future possibilities, unfolding continuously present moment. By embracing emerging technologies, cultivating strong ethical foundations, staying informed upcoming trends, professionals position themselves leaders, shaping tomorrow's accounting standards, redefining success, measurements achieved throughout journeys pursued relentlessly, passion, mastery, craft.